The Reserve Bank of India's Monetary Policy Committee, or the MPC, is gearing up for its last meeting of the year, which begins on December 4th, while its decision on interest rates is slated to be announced on December 6th. This meeting on interest rate is closely watched for the economic cues it offers, as it influences everything from home loans to business investments. Let's break down what it's all about and what to expect. The MPC is a committee comprising 6 experts led by RBI Governor Shaktikanta Das, who decide on key monetary policy rates, primarily the repo rate. This is the interest rate at which the commercial banks borrow from the RBI, and a change in the repo rate can have a ripple effect on various aspects of our economy. A rate cut can boost economic activity by making borrowing cheaper, while a rate hike can help control inflation. The key interest rate has remained unchanged at 6.5% for the past 10 consecutive meetings. It was last hiked in February 2023. While many hope for a reduction in rates to boost economic growth, recent inflationary pressures have complicated the scenario. The MPC on October 9th had kept the rate unchanged but changed the stance to neutral, meaning the RBI was open to either increasing or decreasing the interest rates depending on the data related to inflation and economic growth. In recent months, the RBI has maintained a rather cautious stance by keeping the repo rate unchanged, even as RBI Governor Shaktikanta Das has emphasized the need to balance economic growth and price stability. Inflation, the rate at which prices rise, has been a major concern. Inflation is nearly at 6%, largely due to the persistent rise in food prices. It is within the RBI's medium-term target of 2 to 6%, but at the higher end of the range nevertheless, which has prompted some experts to pointing to a high probability of a rate cut. Although it has shown signs of easing, the recent uptick has led to the cautious stance. Economists and market analysts are divided on the likely outcome of the MPC meeting amid the geopolitical tensions, recent market volatility, and subdued domestic economic data. As the GDP growth has been the slowest in almost 2 years at 5.4% for the July-September period or the second quarter. This has led to speculation about a potential rate cut in the future, possibly during the next meeting, which is scheduled for February 5th to 7th in 2025. Some experts, in fact, believe that the RBI will maintain the status quo, while others anticipate a cautious rate cut. In fact, India's finance and trade ministers have called for lower interest rates to help industries ramp up investments. However, with inflation still above the RBI's ideal target range, a rate hike is also a possibility. Given the current economic scenario, an unchanged repo rate seems most likely though. The RBI is likely to prioritize controlling inflation and maintaining the price stability. A rate cut might be beneficial for growth, but the RBI may hesitate to ease monetary policy too aggressively due to the inflationary pressures. A rate cut could make loans cheaper, benefiting consumers and businesses. However, it could also stimulate economic growth and fuel inflation, while eroding purchasing power. The outcome of the MPC meeting will have a significant impact on individuals, businesses, and the overall economy. So stay tuned for the announcement and its implications on December 6th.